let me break down what I call investment types out there. Now, we're not talking about traders, we're talking about investors where you're taking your money and you're putting it to work for the long term. Number one is you can be a passive investor. When I talk about being a passive investor, I'm talking about following a dollar cost average strategy. I call it ABB, always be buying. This is where you find a few indexes that you want to invest in. Maybe the S&P 500. That's a group of the 500 largest companies in the stock market. Maybe the total stock market. Maybe the Dow Jones. Now what you're doing is you follow a system where every week or every 2 weeks or every month, you are just investing into these funds and you set it and forget it. You don't need a financial advisor to do that. And what we've seen is that the S&P 500 has grown by between 10 to 11% a year on average for the last 100 years. So you can do that on your own. You open up a stock brokerage that helps you do this type of passive investing and it's set it and forget it. The key is when things go down, when you go through a recession, when you go through a market crash, you don't touch it. You don't sell. The only thing that you do is potentially buy more. Option number two is being more of an active investor. An active investor is where now you are looking for opportunities where you can see bigger potential return. You're investing in individual stocks. You're finding those niche opportunities because you're seeing that the money is moving into a particular industry. You see money is moving into data centers. Money is moving into AI. Money is moving into this particular industry. And now you look for stocks that will benefit over the long term because of this shift. This takes more work, more time, more energy, more research, more money. But with that more risk, also comes more potential return because now you can find some of those bigger opportunities. But again, it takes more time and it's more risky. But for some of you, this might be a great opportunity. For others of you, you're going to say, I don't want to have to worry about anything. I don't want to be an active investor. I don't know what the S&P 500 is. I don't want to worry about any of that. I just want to give my money to a financial advisor, which is where a financial advisor can be helpful. Now, one piece of advice that I will give, although I'm just a random guy on YouTube, I can't give you advice because investing has risks. You're never guaranteed to make money or invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But the piece of knowledge that I will tell you is working with a financial advisor is kind of like working with a doctor. Unless you have some sort of basic knowledge, you can't help guide them. You want to have multiple opinions. You want to know that what the advisor is doing makes sense for you. That's why you want to understand how advisors work, how they charge you, and you want to know if their strategy aligns with yours. Maybe you want more cash flow, you want more dividends, you want more strategies that are going to give you more income, or maybe tax protection, or maybe you want more growth. If you have that goal, you want an advisor that can specialize and help you with that goal. If you don't know that basic knowledge, well, the advisor is going to do whatever they think is best, and what they think is best might not be best for you. Then you have option 4, which is a hybrid approach. Now, this hybrid approach can be really a combination of any of these. You could be a passive investor and an active investor. That's what I do. I have money that's automatically invested into my portfolio of funds every Wednesday. Why Wednesday? Because it's in the middle of the week. No secret sauce there. Every Wednesday, money is passively invested into my portfolio of funds. I also have separate money that I put aside for my active investments. Now, how do I find these active investments? Well, my firm at Briefs Pro, we have a team of analysts that are researching what we call market shifts, that are looking for those opportunities. We publish it in a weekly report. That's something that I'm interested in. But again, it's not for everybody. For some people, this hybrid model is going to be being some sort of investor plus an advisor, where now you may be investing some of your money yourself, but you also want an advisor for other estate planning, for maybe some tax strategies, for whatever types of strategies to help you invest your money. Again, personal finance is personal because what's right for you is not going to be right for me, but a financial advisor can be helpful, again, when you have the basic knowledge of understanding, number one, how they can help serve your goals. Do you have a good type of financial advisor and understanding how they're getting paid? Because the reason why a lot of people get upset with their financial advisor is they have no idea how the financial advisor is making money, and then they have no idea how the financial advisor is investing money, and then they see returns that are subpar, and then they see how much money their advisor is making, and then they get completely upset, which makes sense. But this is where I want you to understand the way financial advisors work. Some financial advisors are going to be great. Some of them are going to suck. Half of financial advisors graduated in the bottom of their class, so be willing to talk to multiple advisors that we could find one that works for you. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.